listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family, your business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly at 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it.
Quiet, numbskulls, I'm broadcasting.
Well, I do have a great team when it comes to developing a financing plan or plan to save you money. I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating National Cranberry Relish Day today, getting ready, working our way up to the Thanksgiving holiday. Looking forward to some good food there, good celebrations there, good time with family and friends. National Cranberry Relish Day is today. Ready for that one. Taking a look at the markets, Dow Jones Industrial Average up 9.42 right now, 10 even as I speak to you. 18,966. We are still seeing the Trump jump. It is going on right now. Oil down $1 per barrel. We are looking at the 10-year Treasury as well. That's down just a little bit. We're going to talk today about why mortgage rates, why interest rates have been increasing. I will share exactly why that's happening with you in a little bit on today's broadcast. But we are also looking at gasoline prices. What is AAA telling us right now on gasoline? $2.132, $2.13.2 is the national average. Here in the state of confusion, $2.68.9. And hold on to your wallets. It will be getting more expensive to live in the state of California. Yeah, we decided, we did it. We gave the state legislature a super majority, so there will be no checks and balances to what our left-leaning friends can do to us as we move forward right now. And it's gonna be fun.
Nothing like a little air superiority.
Watching the battle between what happens with many factions of government. Now you're hearing all kinds of mayors, all the mayors across these sanctuary cities. Yes, those are the ones in the blue states, talking about how they just plan on disobeying federal law. They don't care that what the law says about our borders, about sanctuary cities. It'll be very interesting. You see, one of the issues that's going to come up, and we're going to be watching this one like a hawk because it's going to be very, very fascinating to those of us that are students of business. Fascination will be watching because a businessman, the president-elect, is not used to being disobeyed, having somebody tell him, hey, something, we're just not going to listen to you. That's not what a businessman is used to, but that's what we're seeing. Mayor de Blasio in New York City, the police chief in Los Angeles, the mayor of Los Angeles, the mayor of Chicago, where you can go to get killed. That's just a different issue. So all these places, they're saying, well, we're not going to follow federal law. Well, you get a businessman that says, okay, don't follow federal law. The money's not going to follow to your cities. How long do you think that your constituents are going to be happy? Now, $7 billion a year goes to New York City. $7 billion a year going to New York City. How long do you think that they will last if the federal government stops sending some of that money to them while they're not obeying federal law? I'm going to suggest that the people of the city might start saying, you know something, Mr. Mayor, I think that you better get on the bandwagon and start following the law because, you know, our trash isn't getting picked up. Our water isn't being cleaned. We're not getting the city services that we wanted. Think the mayor's, who do you think is going to win that battle? I'm going to suggest to you that it could be the businessman might have a better indication, a better handle on how to deal with those issues. Looking at real estate right now, National Association of Realtors reported sales of existing single-family homes rose 2% in October to an annualized rate of 5.6 million units. The economists were expecting that to go up to 5.43 million units. Be very interesting there. That's another one of those numbers. You just like to see where the numbers fall in. I am also watching the battle here, another one of those famous battles that we're going to see. What's going to happen in the battle of marijuana? That will be another one of those issues. You see, they're finding out that it's not all that it's cracked up to be, no pun intended. So Denver, they found out that yes, it is legal to smoke in Denver, but there are certain businesses that say, you know something, we understand state law, we also understand federal law, we don't want to be involved in it. So anybody that is caught smoking at work or having marijuana in their system when they do random drug tests, yeah, you're out. Sorry about that. Bye-bye. So the federal government state government, yeah, you can say you're allowed to smoke it in the state, but the feds say it is still illegal. So we're not going to get in. See, that's one of the things we see in the lending world, in finance as well. The laws are made for minimum standards. You see, yes, the state of California, we voted and said that we don't mind having people who are smoking marijuana recreationally. So that is the standard for the state of California. But the federal government has a different standard, and then there's going to be people that are going to say, well, guess what? We're going to follow the most stringent of the laws instead of the lightest of the laws. And we don't want to be involved, so it's easier for us to say, we're not going to fight the federal government. They got more money than us as a business owner. So there's going to be the issue that's going to go forward, and you're going to see people saying, well, we voted for it. It's a law. Yeah, you only voted halfway. So that's going to be one of those issues. Now, then there's going to become a whole new business that's going to come about. How is it that we start battling the issue of the drug test? Now, in Denver, what they did was they're trying to rig the urine test, so they start sticking the urine in a microwave in the local 7-Eleven. I got a bad feeling about that one.
I got a bad feeling about this.
Yeah, not good. But that's what they were doing there. That's what some of the people found there that wasn't so good. Looking at more news that we're starting to see right here. State of California once again in the news. 20% of the people that are new arrivals in Southern California, 20% are coming from other countries. Do I have a problem with people coming from other countries? No, not at all. As long as they are coming in a legal manner. So the new census, 1 in 5 new arrivals to Southern California may be from another country. The Census Bureau is telling us about how people moved into and out of the region's major metropolitan areas from 2010 to 2014, a period marked by the end of the Great Recession and the ensuing economic rebound. The report offers a by-the-numbers look at how Southern California is being reshaped by migration from outside the country. Just think about this. If you had an opportunity to go to Michigan or to California and you're coming from another country, where do you think you're going to want to go to? I'm going to suggest, a good number of people, if they know what they're doing, they're going to say they want to go to Southern California. No rain, great weather. Yeah, we do have a lot of taxes. They like to see how we can deal with that one. But still good for business. Speaking of business, what are some of the items that small business owners need to take care of right now? Small business tax incentives that may be going away. You got to take a look at these things. So if you're looking at buying a SUV, a pickup, or a van, You might want to be doing that right away. Thanks to Section 179, Instant Depreciation Deduction Privilege, you can probably claim a current write-off for up to $25,000 of the cost of a new or used heavy SUV that is put into business before the end of the tax year. After claiming that Section 179 deduction, you can claim 50% first-year bonus depreciation for a new, not used vehicle that is put into business use by December 31st. And finally, you can follow the regular tax depreciation rules to write off whatever is left of the business portion of the heavy vehicle's cost over 6 years, starting with this year. Again, talk to a tax counselor to get some information. I've got several more of these tax benefits for small business. We're going to talk about those when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. We will also be chatting about 3 things to do when your credit card balances get out of control. Why are mortgage interest rates increasing? We've got the answer to that question for you. How to avoid Cyber Monday traps. We'll talk about that one as well. You can reach us anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio. On Twitter, @Ron Siegel. Stay tuned. We'll be back in just a few.
Are you earning a safe, secure 10+% return on your investment? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
What if your family business could help clothe a less fortunate family? Or your restaurant could feed truly hungry people? What if you could help to comfort the lonely? Plant sustainable resources where nothing has ever grown before? Or make a child's lifelong wish come true? What if all you had to do was simply do nothing more than what your business already does every day? Would you do it? Introducing Processing for a Cause, a unique program that turns a percentage of your business's credit card volume into ongoing donation dollars for nonprofit organizations and foundations. Simply switch your credit card processing provider to Processing for a Cause and begin supporting a worthy cause today. The process is simple, and the cause will change lives forever. Processing for a Cause.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694552.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel Radio partners. As one of the heroes, real estate agents will rebate part of their commission. Lending partners will give a credit at closing. The title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment. I'm sorry, we don't even have a real-time real estate segment today. We're talking about the Mortgage Minute, brought to you by our friends over at Gold Star Mortgage Financial. When you're ready for that next mortgage, our friends at Gold Star, they've got all the programs available for you. We'll get you in touch with the right people over there, so just give us a call at 800-306-1990. So why are mortgage interest rates increasing? That's a question I see on a very, very regular basis. Why are the mortgage rates increasing? Well, the markets are very finicky. They just don't like uncertainty is one of the big issues. Markets, the bond market, the stock market, they don't like uncertainty. What would be uncertain about the year 2016? Well, according to Freddie Mac's latest primary mortgage market survey, the 30-year fixed-rate mortgage interest jumped to 3.94% last week. Interest had been about 3.5% since June. And why did it jump so quickly? Well, whenever there's a presidential election, there is uncertainty in the markets as to who will win. One way that this is noticeable is through actions of investors. You see, the markets are always trying to predict what's going to happen 6 months out into the future. As we get closer to the first Tuesday of November, or as we pass that obviously now, many investors pulled their funds from more volatile and less predictive stock market, and they put them into the Treasury bonds. That's why we've been reporting Treasury bonds all the time for you. When this happens, the interest rate on Treasury bonds does not have to be as high to entice investors to buy them. So interest rates go down. Once the elections are over and a president has been elected, investors return to the stock market and other investments, leaving the Treasury to raise rates to make bonds more attractive. Simply put, the better the economy, the higher interest rates will go. And we're going to give you more detailed information on this over time. But the good news, even though rates are close to 4% than they've been in nearly 6 months, they are still slightly below where they started the year at 3.97%. Great news is that even at 4%, rates are still significantly lower than they've been over the last 4 decades. And I shared this with you in the past, but I'll share it with you again because we still get a lot of these questions. In the 70s, interest rates 8.86%. Now, what does that mean? 8.86%, and I share this with people all the time. It's better to understand the Ben Franklin rate, dollars and cents. So I'm just going to use a plain old vanilla $200,000 mortgage. At 8.86%, you're looking at a payment of $1,589. In the 1980s, 12.7% was the average. So that $200,000 mortgage was $2,166. In the 1990s, 8.12% was the average, $1,484. In the 2000s, 6.29% was the average, $1,237 for that $200,000 mortgage. So at 3.94% and $948 payment, we are still very, very low compared to the 70s, 80s, the 90s, and the first of this century. Think about that. Anywhere from 25% to under half of the price. So any increase in the interest is going to impact your monthly housing costs when you buy a new home, and we expect a lot of new homes to be bought over the next year. A recent Wall Street Journal article pointed out that while still only roughly half of the average of, I'll quote this, let me say it a little better. While still only roughly half the average over the past 45 years, according to Freddie Mac, the quick rise has lenders worried that home loans could become more expensive far sooner than anticipated, unquote. Tom Simmons, a senior economist at Jefferies, touched on another possible outcome for higher rates. First-time buyers look at the monthly total at what they can afford. So if the mortgage is eaten up by a higher interest expense, then there's less left over for price for the principal. Buyers will be shopping in a lower price bracket, thus demand could shift a bit. Bottom line, interest rates are impacted by many factors, and even though they have increased recently, rates would have to reach 9.1% for renting to be cheaper than buying. Rates haven't been that high since January 1995, according to Freddie Mac. Just a little bit of information there for you. That is the Mortgage Minute, again brought to you by our friends at Gold Star Mortgage. So we are moving right along here. We were talking before the break about some business expenses, business deductions that you can take right now to affect your taxes. So juggle income and deductible expenditures through year end. Here's a big issue, though, for you to remember. And you have to know what your plan is and what your goals are. If you remember last week, Melinda Johnson joined us on radio, and we were chatting about showing a larger income than what you may otherwise contemplate if you're thinking about buying a home in the next 12 to 24 months, if you're thinking about buying investment property in the next 12 to 24 months. You need to contemplate those things. You might want to be, right now, to save tax dollars. And sometimes, here's the issue. Sometimes tax savings and your long-term goals are not congruent. So you might want to juggle income and deductible expenditures through the end of the year. If you run your business as a sole proprietorship, an LLC, partnership, or S corporation, your share of the net income generated by the business is reported on Form 1040 and taxed at your personal rate. Now, we are anticipating, who knows when it'll happen, but the new administration is telling us that there's going to be some tax law changes. So what that means is that all things being equal, if you're not looking to buy real estate, if you're not looking to qualify for a loan, you want to pull your deductions into the current year and minimize your tax liability this year, let your income be next year, and then you're better off. Now, what does that mean? How do we deal with that? That means you might want to start looking at, maybe you want to pay your property taxes early. Right, I know they're due November and March when they're late in April, but there's nothing that says you can't pay for them early. You can pay for your property taxes, your April payment, the one that's due or late in April. You could actually pay that in December if you like, and then you're going to be able to go ahead and take that deduction on your 2016 taxes. Maybe there are other items. Maybe you want to make your house payment early so that you get that extra deduction of interest. How to defer taxable income. Most small businesses are allowed to use cash method accounting for tax purposes. Assuming your business is eligible, cash method accounting allows you to micromanage your 2016 and 2017 business taxable income in order to minimize taxes over the 2-year period. If you expect your business income will be taxed at the same or lower rate next year, here's some specific cash methods to improve or to defer some taxable income into 2017. And again, I'm not giving tax advice. I'm giving you ideas to use to talk to a tax professional, a CPA, an enrolled agent. So charge recurring expenses that you would normally pay early next year on a credit card. You can claim 2016 deductions even though the credit card bills won't actually be paid until 2017. Pay expenses with checks and mail them a few days before year end. The tax rules say you can deduct the expenses in the year you mail the checks, even though they won't be cashed or deposited until early next year. For big ticket expenses, consider sending checks via registered or certified mail so you can prove they were mailed this year. Before year end, prepay some expenses as long as the economic benefit from the prepayment does not extend beyond the earlier of 12 months after the first date on which your business realizes the benefit or the expenditure. Or secondly, the end of the next tax year. For example, this rule allows you to claim 2016 deductions for prepaying the first 3 months of next year's office rent or prepaying the minimum for property insurance coverage for the first half of next year. On the income side, the general rule for cash basis business is that you don't have to report income until the year you receive cash or checks in hand or through the mail. To take advantage of this rule, consider waiting until next year end, until near year end, to send out some invoices to customers. That will defer some income until 2017 because you won't collect the money until next year. Needless to say, this idea should be used only for customers with solid pay histories. Take advantage of depreciation breaks. All the super favorable depreciation rules that applied last year are also available this year. If you've not already done so, take advantage of these beneficial rules before year end. We've got some more of these that we're going to talk about when we come back. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, we're going to chat about the more tax benefits, things to consider, your credit card balances get out of control, how to avoid Cyber Monday traps. You can reach us anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio, on Twitter, @Ron Siegel. And if you miss any part of our broadcast, Ron Siegel 1, Ron Siegel the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel lending team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel lending team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel lending team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender.
Are you ready to overcome your biggest blocks with money and time? Your solution? Big Profits Now World Summit. The best skills and strategies to double and triple your business profits without doubling or tripling the work. This summit has gathered 24 experts specializing in business growth. It's a free online event that's happening now. Go immediately to claim your free ticket at BigProfitsNowLive.com. Enter your name and email and receive these free video interviews directly to your inbox. Again, that's BigProfitsNowLive.com.
Siegel Lending Team offers you buying power. Let's say you can afford a monthly mortgage payment, including principal and interest, of around $1,900. With today's rate on a 30-year fixed mortgage of 3.75%, APR 3.85%, that payment could support a $416,000 mortgage. But if you wait and rates tick up to around 6.5%, which is roughly the average home mortgage rate over the past 30 years, that same $1,900 mortgage payment, including principal and interest, may only be able to support a $314,000 mortgage. That's over $100,000 worth of home you're missing out on by waiting. That's buying power. All you need to do to get started is reach out to the Siegel Lending Team at 800-306-1990. That's 800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Payment example excludes taxes and insurance. Call us for full details, 800-306-1990. That's 800-306-1990 or SiegelLendingTeam.com. Equal housing lender, licensed under NMLS number 217037.
Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel lending team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel lending team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel lending team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender.
Do you own real estate or have assets over $150,000? Do you know one of your heirs will be the probate courts and the IRS? If you don't have a living trust, you will go through probate. Call Heritage Financial Services toll free at 1-855-434-7400 for a free review. Check us out on Facebook, Heritage Financial Service in Lake Forest, California. That's 1-855-434-7400. Again, 1-855-434-7400.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio anytime at 800-306-1990, 800-306-1990. The Your Credit Matters segment today being brought to you by CreditSanitizer.com. You have a credit report. There are errors on your credit report. There are errors on everyone's credit report. Been looking at these reports since the 90s. I have yet to see a credit report that did not have errors on it. So just a thought there for you. Be aware they've all got the errors. So what are you doing? Credit Sanitizer, top left button, they have an option there. And I know it sounds like a lot of money, it's a big a nuisance, I should say. $87 a month I think they charge to monitor your credit for you. Includes LifeLock and also working on your credit scores and a whole host of other items. You may want to take a look at that. It might be a good thing for you. And especially if you're looking at getting a new house, a new car, new credit cards, new furniture, anything that you're doing, I'm going to suggest that might be a benefit. 3 things to do when your credit card balances get out of control. One of the key numbers in your financial life is your debt to credit ratio. Has a big impact on your credit score and on your budget. Basically, your debt to credit ratio is how much debt you carry versus how much credit you have available collectively and on individual revolving accounts like credit cards. So like other ratios, this one can be expressed as a percentage. For instance, if you have $5,000 of credit limit and a $2,500 credit card balance, your debt to credit ratio for that account, 50%. If you have a $10,000 credit limit and $2,500 credit card balance, your debt to credit ratio for that account, 25%. The lower the percentage, the better it is for your FICO scores. When it comes to your credit score, that percentage matters quite a lot. Credit reporting bureaus like Experian and Equifax also call your debt to credit ratio your credit utilization. Just another way of saying that this percentage is about how much credit you're using compared to how much you have available. About 30% of your total credit score, give or take, depending upon the formula you use to calculate it, is based on credit utilization. The more of your credit you use, the lower your credit score will be. So then there's 2 ways of increasing your credit score. Increase the limit on your credit cards or your revolving debt, or decrease the utilization. Either one will work the same. Your credit utilization ratio doesn't impact your budget, but most of your credit card payments are based on the balance you owe. So the more you owe, the bigger your minimum payments will be. When credit card spending gets out of control, your debt to credit ratio can get out of control for a variety of reasons. Maybe you ran into an emergency, had to change some medical bills, had to charge some medical bills or car repairs to your credit card. Or maybe you've just let your budget slide and found yourself covering basic bills with credit. You could also have made a conscious decision to temporarily run up a credit card balance in order to finance a big ticket purchase. Whatever the reason, your debt to credit ratio will increase as your credit card balance or balances increase. When this happens, you'll see your credit score take a hit, sometimes quite a big one. So here are 3 steps you can take if you find yourself in this situation. Number 1, build a small emergency fund. This step is especially important if you find yourself dipping into your credit card accounts to pay for emergencies on a regular basis. Sometimes revolving accounts like credit cards or HELOCs can be a decent emergency fund. Just remember not to take out more credit than you can budget, and not to take out more credit than your budget can handle as well. Saving a few hundred, a couple $1,000s may be a better bet. One rule of thumb here is to save $1,000 in your emergency fund. That may be too much or not enough for you. It just depends on your situation. Look back over the last 2 years, money-wise. Figure out when you spent on credit cards due to an emergency and try to estimate how much you'll need. Stop using credit cards. That one can pose some problems for people, but I'm going to suggest if you stop using credit cards, keep the credit cards open. That'll help your score. If you close the credit cards, that hurts your score. You want the credit cards to be active. That means even if you go and buy a tank of gas or a cup of coffee, you want those cards to be active. Some gurus will tell you to cut up all your credit cards and shut down the related accounts. I'm going to say don't do that. Don't listen to them. There are some areas where that might work. I'm going to suggest in SoCal, not a good idea. Yeah, pretty bad one there. Number 3, pay your credit cards down one balance at a time. Again, this one here has an issue. Paying them down one at a time, well, if you have no plans on using your credit, that'll work. But if you're looking at buying a house, buying a car, then the issue becomes you want to pay them down proportionally and in a percentage rate. Pay them down so you get all your cards below 70%, then get all your cards below 50%, then all your cards below 30% utilization. When you do that, you're going to see your credit scores, your FICO scores increase dramatically. Now, the other area there is, again, when do you pay your credit cards? A lot of people pay their credit cards right before the due date. That does you no good for FICO scoring purposes. You want to pay your credit cards right before the statement reporting date. That's going to get you your best numbers right before the statement closing date. It means you have to go online to get that information. It'll work better for you. Just a thought there. There are some items for you to do when your credit card balances seem to be getting out of control. That is your Credit Matters segment today. Again, brought to you by our friends, your friends at creditsanitizer.com. So we're going to go back to talking a little bit about some of the things small business owners need to make tax-wise before the end of the year if you want to save a little bit of tax money. Section 179 deductions is another item. Again, no tax advice being given here. Just trying to get you some information so you can make the great decisions. Ask a CPA or tax planner to help you out with these. For tax years that begin in 2016, the maximum Section 179 instant depreciation deduction for eligible new and used assets other than heavy SUVs is a whopping $500,000. For instance, the $500,000 limit applies to Section 179 deductions for computer gear, off-the-shelf software, new or used office furniture, new or used machinery and equipment. The $500,000 limit also applies to new or used heavy long bed pickups and new or used heavy vans used over 50% of business. Real property expenditures have traditionally been ineligible for the Section 179 deduction privilege. However, in recent years, an exception allowed Section 179 deductions for qualified real property expenditures. Thanks to legislation enacted late last year, the exception is now permanent. That means until they change it through another legislative act. For tax years beginning in 2016, your business can therefore claim Section 179 deductions for up to $500,000 for expenditures for the following types of real property: certain improvements to interiors of leased non-residential buildings, certain restaurant buildings or improvements to such buildings, certain improvements to interiors of retail buildings. deductions for qualified real property count against the overall $500,000 maximum for Section 179 deductions. Key point, as I always share, consult your tax advisor for full details and limitations if you are considering taking advantage of the Section 179 deduction privilege. The rules are somewhat complicated. I'm going to share that with you. They are all complicated. That's why they keep the CPAs, the tax professionals, all in business. 50% first-year bonus depreciation. Your business can claim 50% first-year bonus depreciation for qualifying new, not used equipment and software put to business use before year end. The bonus depreciation deduction is on top of any allowable Section 179 depreciation. For example, bonus depreciation is available for computer systems, purchased software, machinery, equipment, office furniture, and so forth if the costs exceed what you could immediately write off under the Section 179 deduction. Bottom line on all of this, the results of the election will have some changes for you in your strategy. And if you want some great counsel, give me a call. I'll put you in touch with the people who understand all these things, and they can give you the guidance you need to make sound business decisions. You just need to understand the questions to ask them. That's the big issue right there. If you don't ask the right questions, how do you make a great decision? How do they can't read your mind. So make those phone calls. Make them before, I'm going to say make them right away. Maybe you have to wait until after Thanksgiving. But the idea is make these calls right away. That way you can do your tax planning. Tax planning is done now. It is not done later. Just a thought for you. Again, that is the Your Credit Matters segment brought to you by CreditSanitizer.com. They've got some great information for you. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, we will be chatting about how to avoid Cyber Monday traps. That is a biggie. Remember, you can reach us anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. Stay tuned. We will be back in just a few.
Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area-trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Isn't it time you found out the truth about FHA-insured home equity conversion? No, it's not your grandfather's reverse mortgage. This just may be the finest financial planning strategy available for all homeowners of retirement age. Helping protect what you've earned is the job of your board of directors with continued education. Major research has shown that using a HECM will significantly enhance the success rate of a retiree's portfolio and legacy. Please allow us to educate. For your complimentary consultation, call Jay Kaplan at 949-300-3855. That's 949-300-3855.
Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed-rate loan below 4.25% APR? This means with $10,500, you can purchase a $295,000 home and have a principal and interest payment of about $1,400 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or 1-800-306-1990. Rate subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender. Not endorsed or sponsored by any government agency.
Do you have a goal of mortgage-free home ownership? What if your home was valued at $500,000? Are you aware that a free and clear home could be costing you $2,500 every month, $30,000 per year? The mortgage planners at the Siegel lending team would like to show you how you can own your home, generate tax-free income, and accumulate family wealth. You simply need to call the Ron Siegel team at 1-800-306-1990. That is 1-800-306-1990. By sending the team a copy of your most recent mortgage statement, the team will send you a no-obligation real estate plan. You be the judge if this is right for your family. Again, all you have to do is send the team a copy of your mortgage statement by email to reap@ronsiegelradio.com or call today. Ron Siegel, 1-800-306-1990. That is 1-800-306-1990.
Rate subject to change and without notice. Licensed by the California DOC and BRE NMLS 217037 and 145502 and Cal BRE 01869452 and 1866775.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Word on Wealth segment today being brought to you by Processing for a Cause. Another one of those great institutions, Processing for a Cause. They take and match your credit card processing expenses, and then they're going to take 20% of those processing expenses and give it to the nonprofit organization of your choice. Another great organization. I love these groups that give back to nonprofits and are helping people out all the time and across our communities. So, how to avoid some of the Cyber Monday traps? And first thing off, be very, very careful what you're doing. There are issues out there. There are people out there that are always trying to fish, PHISH, fish to get your contact information. They're trying to scam you, in essence. So be careful. When you get a lot of offers for Cyber Monday, one of the things you might want to be careful of is if you get a text or an email, visit the establishment online yourself before just clicking on their offer to you. Take a look at the URL for their offer. That's that address in the top. If it's not something that makes sense, you see, you get a lot of Amazon. A lot of people will try and scam using Amazon because they're so big. If it doesn't say Amazon.com as the URL, don't click on it. It's something that it could be a forwarding issue. You know, Ron Siegel Radio, we use a forwarding service just to make life easier for you so you don't have to worry about all the different URL and long codes and all that. So if you're trying to listen to a replay of a program, I tell you all the time, go to mbelinks.com/iTunes. Well, what that's going to do is it's going to take you to the iTunes store, but it goes directly to our page within the iTunes store, so you don't have to navigate through the whole process. Similarly, when I tell you that if you want to get a $1,000 gift bag, mbelinks.com/RSR gift bag. It's another very, very simple method of going in there and getting some good stuff. So that's why I use those. There are other people that use those same type of URL shorteners. You just have to be careful of who they're coming from. If you don't recognize the individual, if you don't recognize the URL, be careful, because they might be just trying to get your information. Unless you really know who it is, don't give somebody your credit card information, your birth date, your social security number. A lot of these are just scams so they can steal your identity. Again, as I shared to you before, go ahead and take a look over at our friends with creditsanitizer.com. And when you look at their information at Credit Sanitizer, they're gonna help you. They're gonna put on that LifeLock, so it'll kind of help with a little bit of protection there. Now, LifeLock is just one service. They're not infallible, so be careful. Don't go thinking that just because you have LifeLock, you're safe from everything and anybody. It's just an issue. They're just a tool for you, not the all-knowing. That is the Word on Wealth segment, again, brought to you by Processing for a Cause. Don't forget, if you do want that gift bag that we have, Ron Siegel Radio gift bag, text RSR gift bag to 79564. You will get one of the gift bags. Has about $1,000 worth of goodies in there for you. If you're interested, again, it's free.
More money, more money, more money.
Yeah, there's a lot of goodies in there for you. So again, text RSR gift bag to 79564. You'll get that very, very easily. Looking as a consumer advocate, 7 secrets for getting the most comfortable airline seats. I thought I'd share some of those with you. I saw this article. A lot of things people hate about travel, food or lack thereof. The food that you get isn't good if they give you anything. Hidden fees, even other passengers. In fact, out of 43 industries, the airlines ranked 36th in terms of satisfaction, putting it along with cable, internet, and cell phone providers in the bottom quartile of industries, according to data released earlier this year by the American Customer Satisfaction Index. I always wonder, maybe it's just me, but why is it that an airline has a customer service department? Wouldn't they just call it customer lack of service department? I mean, it's just my thought. What's more, it's getting worse. Economy class seats are getting thinner and less padded to save fuel. The padding is thinner to save fuel. Less leg room for those people that are like me that's got a bad leg. That's always a fun issue. You can go to airfarewatchdog.com to get some ideas on what the best of the airlines are. Pick airlines that offer the most legroom. Nearly 4 in 10 passengers say that giving more legroom is the number one thing airlines should do to improve the in-flight experience. Know which planes have the most space. Legroom differs not only between airlines, but within the same airline, as specific jets have different configuration. Counter points out that Airbus planes tend to have more interior space to create more legroom, though that doesn't mean the airline has necessarily configured them with more legroom. Just a thought for you. That's why experts recommend that before you book a flight, check out seatguru.com, which shows the specific jet and how much legroom it has in each class. Beware of regional jets. I just noticed that my son's getting on a regional jet tomorrow. I don't think he knows that flight to San Francisco is on a regional jet for somebody his size. Should be nice and interesting. While this isn't universally true, many regional jets have less room, both in terms of width and length, than larger jets. Regional jets can be really tight. That'll be fun for them.
So I know whose ass to kick.
Try to get a better seat for free. Sometimes you can get extra legroom and a better seat without paying for an upgrade. Again, this is according to thepointsguy.com. He recommends asking the gate agent nicely and early if you can move into the bulkhead, the first row of economy class, or the exit row, which tends to have more legroom. Just beware, as the first row of exit rows often won't recline, and most airlines do charge for exit row seats. I always figure that the best seat on every airline must be the middle seat. That's the one that's available last, and they charge most for the last minute flyer. Understand what you should and shouldn't pay. If you can't get a free seat upgrade, it may make sense to pay for more legroom. The problem, of course, is that the rates vary significantly, so consumers get confused about what they're getting a deal or not. That's not a hard and fast rule on what to pay, but in general, the cost for extra legroom varies from $15 to $30 per flight that last up to 3 hours, and $100 or more for longer flights. Know when it's worth it to pay more. Again, if you're going on a real short flight, you may not care about paying the extra money as opposed to going on the longer flight where it might make sense for you to pay the extra money. If money is no object, here's some ideas of where to look. Lie flat seats. Prepare to shell out thousands. You should look for the ones that flip down rather than the ones where you press a button and they slide down, as these kinds of seats have 2 different surfaces, one for sitting, one for sleeping, that make them more comfortable. Singapore Airlines is the gold standard for posh business class seats. Cathay Pacific is also another good one. Air New Zealand and Virgin Atlantic, all top-notch airlines for you to consider. As always, we do ask you, set that first radio preset button to come back here every day to join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Special thanks to all of our sponsors. A big thanks to Steve, who's engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money, help a lot of people, have a lot of fun, have a great day. We will talk to you next time on Ron Siegel Radio.